Hi, this is David McElroy with David McElroy Real Estate, McElroy Realty Partners. I've got a longtime friend, Kathleen Derogatis, who's in the lending business. She and I owned a mortgage company together many, many years ago, and I've gone off into being the real estate broker. She stayed over on the mortgage side. And we were talking about the types of financing available that many people still think they have to put 20% down. I even see videos on YouTube saying you have to put 20% down. And I thought, well, let's just set 20% down is fine if you have that and if that's a match for you. But there's so many other alternatives beside the grant program. So, Kathleen, you want to tell the audience a little bit about the 100% financing that's available. Is it real?
It is real. I have two programs like that, Dave. The first one is for first-time home buyers. It goes up to 335,000, and it's a conventional loan, 30-year fixed. The great thing about this product are two things. One is there's no down payment required, so the borrower is just going to be paying for closing costs. And the other is there's no mortgage insurance. And in today's environment, that can be really costly to add on to a mortgage payment. So the only qualifications really is a 680 credit score and not a lot of personal debt.
When you say not a lot of personal debt, we're accustomed talking about, the mortgage payment can't be more than so much of your income. And then the mortgage payment plus car payment and credit cards can't be more than a certain amount of your income. What are the current ratios so the audience can run calculations on their income to payment?
Well, it's a 43%
And
of
that
their
would be
total income.
the house payment together with credit cards and what have you.
Yes.
And it can be two people just as well as
Yes.
it could be one. So is there a maximum they make above a certain amount? This doesn't work for them because you said first time home buyer.
That's a great point. Actually, there's no income limits on this loan, which is really great because a lot of the other grant or down payment assistance programs do have income limitations.
Yeah.
So two borrowers have a difficult time qualifying because their income can go over.
Yeah.
Our interest rate is also very competitive. So when you add those components together, a great rate and no mortgage insurance, it's going to be a lower monthly payment for them than if they were to get any down payment assistance or most of the programs.
And is there a minimum credit score to qualify?
There is a 680.
680. And are there still three credit scores and you pick the middle one? Is that what it amounts to, or do all three of them have to be above 680?
No, that's exactly correct. We pull all three bureaus and we use the middle score.
So what's the difference between the first time buyer program, and the professional program, someone that's owned multiple houses over time?
Yeah, it's exactly for that. The difference is that this program is geared towards professionals that have a Texas license in order to perform their job on a daily basis. So for an example, like you're a real estate agent, you have a license, I have a license as a mortgage officer, somebody like a hairdresser, a doctor, a teacher, we do use their certificates, police officer. And this loan is also 100%, but it goes up to $1 million in a purchase price.
Wow.
And yes, it's super amazing. The only qualifications are the same, a 680 credit score, because remember, we're not requiring any down payment. So we want to make sure that the customers are really able to make this payment. And then the debt ratio is similar.
And is this primarily for people in the DFW area, Dallas, Fort Worth, and surrounding suburbs? For
That's
your
exactly
institution?
right.
Yeah.
We have to be within a certain mile radius from any of our bank locations here in DFW. But we go all the way from Fort Worth, Frisco, McKinney, all the way into Longview, Terrell, Tyler. So we have 21 locations in DFW.
Have you noticed, I remember back a couple of years ago, you'd put a property on the market on Friday, you'd have 50 or 100 showings, and you'd have 20 contracts by the following day or the following Monday. Is the market still like that, or has it slowed down? And if it's slowed down, what's this different now?
It really seems like the houses that are really in great shape, we are starting to see multiple offers on those properties. So those are going fairly quickly. The sellers are not providing any seller concessions. But what I am seeing is if the customers, depending on where they are in their price point, are willing to look at a house that has really good bones and maybe needs a little bit of cosmetic updating, those houses are going to be a little more affordable as far as the sellers might be willing to pay some closing costs for them. And they're probably not going to be as competitive on the market because it does seem like many people are looking for the homes that have been newly remodeled or have really been updated.
Yeah, I've noticed the same thing. Frontline, perfectly ready, might not sell
Yes,
necessarily in the first weekend, but it could. And maybe where we used to have 20 offers, now they have three, but you can only sell to
exactly.
one, right? You can only sell to one. So it sounds to me like values are holding stable.
I would say so. I think, again, in some of the outlying areas or some properties that are really not in great shape, those properties you could probably negotiate a little bit more with if they've been on the market for, let's say, 60 or 90 days.
Yeah, I've noticed that sellers, especially if their realtor maybe is a little bit timid, they think they want whatever for their house. And they put it on the market and they still think they're going to get whatever, no matter how overpriced it is for condition. But
Right,
over 2, 3, 4 months, they begin to realize that they aren't going to get what they wanted. Then there's two types of sellers in that group. One, they still have to sell, so they'll get realistic. The ones that just said, if I can get this, I'll sell, otherwise not, and they're going to be
right.
gone. So you really want to find someone that was overpriced for condition, who finally has worn down, and now they're willing to be more flexible with you as a buyer. And the bones, important one. I had another investor talk about the same thing. If it's got good plumbing, good foundation, good roof, good electrical, then don't concern yourself with whether it's outdated. That stuff can be taken care of over time.
Absolutely. And it's a really important point that homeowners insurance has really gotten costly. The price has gone up dramatically, and they are looking for exactly those things: the roof, the condition of the property. And they will definitely look past cosmetic, but it's got to be a property that's in good condition in order for the homeowners insurance to be, you know, a reasonable monthly amount rather than, twice as much.
Now, you and I have been in this business for a long time. If you were going to give some words of wisdom to buyers that are out there in the market now, so that they would have a strategy, a realistic assessment of the work that it will take for them to get a good value. That doesn't mean perfect condition. It just means a good value. What would you say?
Oh gosh, I would say, you know, look at a lot of different properties. If you're looking in a certain market, stay focused on the homes that the real estate agent sends to them to review. And even if they're not interested in it, take an extra minute to kind of really look through that property, because I think what happens to especially a lot of first time home buyers is they miss a property that's really great because they haven't seen enough or they really don't know the market. And I think what we already said earlier, if you are willing to look past a few cosmetic updates that you could do yourself once you get into the property, you will get a much better deal.
I've noticed this, and it's not just to real estate, but for someone to get a sense of what a dollar buys, they need to look at enough properties so that
Mhm.
instead of this dream that they had before they got into reality being what they have, they now start to get a sense of comparative value. So when you've looked at whatever, it's different for different people, but that's why it's
Yep.
worthwhile to look at a cross section of homes so you start to get
Yes.
a realistic assessment of where you are. Then you don't feel like you're settling. You feel like you've grasped what's going on. And it was funny. We owned some real estate together, Kathleen and I, years and years ago. And I pulled up two of them yesterday. And I think one of them was like $89,000 when we bought it. And the other one was like $135,000, maybe 150. And they were both about 300. One was $340,000. And the other one was, I think, about 300,000. So the point of this story is appreciation is a long-term game, and it's part of the value of home ownership. Not the only one, but as part of it. I look, we aren't going to stop printing money. And as long as we're printing money, there's more and more money chasing the same amount of goods and services, which makes them go up in price. With real estate, you get leverage, right? So you put whatever amount of money over time into your house, but that appreciation is on the entire value of the house, which is how rich people get rich. It's using the right kind of leverage. Well, Kathleen, I want to thank you so very much. How might the audience get a hold of you if they'd like to pre-qualify for one of these programs?
That'd be great. There's two ways. I can give you my email, which is probably easier for me to give you my phone number. It's 817-420-7714. And that will go directly to my cell phone or my office phone so I don't miss your call. And then I can get back with you and send you my link.
And it's pretty simple. You can do it. The people used to think you had to go down to the bank, but you can do it online. You're always
Absolutely.
welcome at the bank, but you don't have
Yep.
to anymore. You're busy. And how long does it take to complete an online application?
Maybe 10 minutes.
Okay, so no big deal. And any
Nope.
fine tuning that has to be done, you'll help them do that. Whatever documentation you need, you'll help them with that. It's really a very simple process. How long does it take to close a loan now from the time that they write the contract, bring it to you, and they're pre-qualified?
Really, 30 days is pretty standard, depending on how quickly the borrower gets us everything. So we can do some transactions in less, but for the most part, by the time we get the appraisal, the title work, and put it all together, it's going to take about 30 days.
I got it. So if they put a closing date 30 days from the time we're submitting the offer, assuming they got pre-approved, and why is it so
Yes.
important to get pre-approved? Why?
Oh, gosh, it's so important to get pre-approved, even if you're not going to purchase a home, maybe 3 to 6 months in the future, because it really sets the course and really allows us to look at all the different components into getting pre-approved to make sure that we haven't uncovered a challenge that we're going to have, because it would be super disappointing to go out and think that you're going to make an offer on a house and get pre-approved, and then all of a sudden you find out that there's something in your credit profile or your financial profile that we still have to work on a bit. So this way we can look at the whole entire credit file, and I can make recommendations. We can look at budget, we can go over numbers, and that way I think you're more equipped to really make a decision when the right house comes available and you're ready for it. You're ready to make an offer.
Well,
And Dave, I wanted to say something about the interest rate market, because a lot of people are concerned about that.
yeah.
And, interest rates, yes, are higher than they were the last couple of years. But the thing that even better than myself, the property values are still going up in most properties. So we do have a group of individuals that are waiting to maybe buy when rates go down, which we really don't know when that's going to be. And in the meantime, between now and then, the property values are definitely going up. So that small amount of difference in the interest rate is probably not going to over compensate for that additional pricing in the home.
I'll tell you something else I've noticed some people are waiting for because of what happened in 2008. Not only are they waiting for interest rates to come down, but they're waiting for rates to come down and property values to collapse so they can buy a
Mm,
bird's nest on the ground at a 3% or a 2% interest rate. And I think you hit the nail on the head. The future of interest rates is impossible to predict. We won't go into that conversation on this, but I can tell you one thing for sure. There are 300 people a day on average moving to the DFW area. We don't have enough homes. And what really supports value is not interest rates. What supports value is
demand.
that there is more demand than they can
Mhm.
possibly give you in housing. And there's plenty of housing opportunities with a little bit of patience. Someone can get a home. If you remember back, the McCallum property. Yeah, we talked about that. It looked really nice to us at the time. I would say it's probably less nice today, but it's more than 4 times as expensive. Interesting, huh?
Yeah.
Well, I want to thank you
But
for your time today. I'll put down below
yes.
in the notes how they can get a hold of you. So and getting pre-qualified is painless. If there is some work you need to do, it's good. It's like going to the doctor. You never want to find out you got a problem. But if you have one, it's good to know so you can take corrective measures and not get left out.
Sounds great. Thanks. I look forward to working with you, Dave.
My great pleasure. It was nice talking to you again. You have a wonderful day.